Hi, this is Chris Smith from TheOptionClub.com. Today is Friday, April 24th, 2009. It's about 8:30 in the morning on the West Coast, Pacific Standard Time. This is live market that we're looking at on a risk graph. You'll see that there's not a lot of movement right now, and it's because that the particular stock we're looking at is pretty calm. In any event, the reason I'm showing you this video is I wanted to show you this particular risk graph, and it's a risk graph that you may not have seen before, and the reason is because it's not any one particular options strategy. The fact is that this is a combination of several strategies that when they come together they create a very broad profit envelope. Now, there's no secret in putting these things together. It's just a style of trading that you could very easily learn. And in fact, we have a very large library of videos that teach exactly this. But it goes beyond that because, well, first of all, let me show you kind of where we're at on this trade. We've made a profit right now, and we've got a margin requirement of about $500, and we'll make maybe $100 on this, which is a 20% return on margin. That's certainly a pretty decent return over about a month-long period. But what we also have is we have a one standard deviation here. This light shaded blue area, that's one standard deviation up or down. So this stock, Nordic American Tanker, can make a one standard deviation move up or down, and we still make money. These red hash lines, the center one is the live price, and the one to the right and to the left are plus and minus 10%. So Nordic American Tanker can rally 10%, it can drop 10%, we still make money. In fact, it can go beyond the 10%, it can go beyond a one standard deviation move. We still make money. This is a high probability trade. We're probably going to make money. In fact, we're probably going to make about 20% or more on this trade just by letting the position mature and adjust it as necessary to keep the market within our profit envelope. Now, the next thing I want to show you is I want to beta weight this portfolio, and I'm going to beta weight it to the S&P 500, or actually the spider. Okay, and what we're looking at is an entire portfolio of trades now. We have positions on General Electric, on Nordic American Tanker, on the Qs, on RIM, on the spider. And this is what our portfolio looks like if we were to beta weight it and present it as a risk graph. Now again, this risk graph to you doesn't resemble any particular option strategy, and that's because there's a whole bunch of strategies that make up this picture. But the important thing is that even though we can't pick out an individual strategy, what we can do is assess our risk immediately, not just from a pictorial representation on the graph, but we can also look at our delta, gamma, theta, our Greeks, and we have a pretty low delta right now. We only have about an 8 delta, plus 8 or 9 delta, and that's basically equivalent to owning 9 shares of the spider. That's our risk. We have a theta of 17, which means that we're making $17 each day from the passage of time. We have a somewhat positive vega, which could be a problem if volatilities fall significantly. We have our profit or loss for the day, which is about $300, and our profit or loss from the open, which is a little over $800. So what we've done is we've created a portfolio that is profitable, and it's going to stay profitable even with a 10% up or down move or a one standard deviation move. And in fact, you can see that the spider can go beyond $100 a share, which it's probably not going to do between now and May 16th. And it can drop down below, down to about 75, and we still don't lose any money. Now obviously our biggest risk is probably a little bit to the downside, but there are techniques that we can use that will adjust this profit envelope further if we need to. So if we start moving down to a point where it becomes concerning, we can adjust our profit envelope to accommodate that move. And it's just a matter of learning the techniques and the strategies that allow you to do this. Now I wanted to get this video out to you guys because it's Friday and I wanted to touch base with you. But I also wanted to let you know, tomorrow on Saturday I'm going to send out another email with links to about 8 videos, all of which have to do with this style of trading. And the reason I'm sending it out is because I think a lot of you are going to be really interested in learning how to do this. And for the first time, I'm in a position now where I can make this information available to you, and I'm pretty excited about it. So I hope you take the time to watch the videos this weekend, and then on Monday we're going to follow up, and I'm going to tell you exactly what you need to do to learn how to do this. So you guys have a good weekend. I hope you have luck in the market the rest of today, and I'll be in touch with you tomorrow.